Hello, this is the chart profit video, approaching an hour and a half into the trading day on Friday 20th of January. This is from the pre-open today. We're looking at the E-mini S&P. Seen a range of overlapping value areas over the last few days. Price being pulled back to continuously to 2265, which is the 4-month point of control, and continues to attract time. The market seems to be, or rather the E-mini seems to be oscillating around that level, and I've written today that this looks like the market waiting for the next catalyst. Obviously, inauguration today, day to day, could be a volatile day, but price on the E-mini relative to 2265 will give us a clue re short-term price direction. Just looking here on a 5-minute bar. Here's the level 2265. Currently, we're printing above that level. Just look out on the daily. We can see the Trump rally here, and then we've gone into this period of ranging activity around that 2265 level. Looking here at the breadth indicators for New York through yesterday, Thursday's close. This indicator here, the net new high is 25. Black line just dipped very slightly below zero. Percentage stocks greater than their 50-day moving average stays above 50. That gives us a neutral on the breadth chart, which is a little grey area here. We've come from quite a period here of green, which is positive breadth on that little breadth system I run. Price momentum at the bottom, price oscillator, positive now for the spider, but has just dipped just down a bar, just ticked a little lower. If we look at the price imbalances at the top here, you can see from about this point here, early November, we've had some green bars indicating aggressive buying on the E-mini profile, and then a couple of red bars up here indicating sellers, but thus far pretty ineffective, which is often the case when the breadth is positive and the price momentum is positive. If the breadth turns negative or red here and the price oscillator heads down below zero into negative territory, that could create a different environment. And if we see the selling marked again, we could see something different, but currently, as long as the E-mini holds above 2265, even in the short term, in a strong price location. Looking here at my version of the Ridex assets ratio, reached 11.83 at this point here, the highest level since June 2015, and saw it dip off down to just above 6, and we've rallied back a little, currently about 9, just below 8.7. Worry here is the really low level of assets in the bear funds. We're looking at the bear fund assets here, which remain really low. And here we're looking at the bull fund assets, and you can see how volatile they've been recently. Reached their highest level this year. Sorry, in fact, their highest level since the start of 2016 at this point. But interestingly, the bull fund assets have declined rather sharply from that point. It's probably nerves regarding today's event. Seen something similar in the public poll from AAII, and the retail investor here expressing a more bearish opinion than previous weeks. The bulls percent this week was sharply lower at 37% from 43.6. That's quite a fall in bulls percent this week. The bears percent was higher at 32.7 from 27. Again, that's quite a jump. So the net, if we look at the net figure, bulls minus bears, and the negative change, actually haven't included it here, but the negative change this week is the largest since the week ending 12th of February 2016. Just to make sure you've got that, that's the negative change in the net position, bulls minus bears, from last week to this week. That's the largest since the 12th of February 2016, which, as we know, is close to the market low here. Just looks like nerves in here, and also in that Ridex ratio from the retail investor. Seeing something a little different in the investors' intelligence polls. That's the newsletter writers. Bulls percent was higher at 60.3. That's the highest bulls percentage since June 2014. Bears percent was lower at 17.3. That's the lowest since July 2015. And I make that the net bulls minus bears again at 43.3. That's the highest since May 2015. We've also seen an outflow in funds, equity funds including ETF. Lipper US fund flows reported an outflow of $3.1 billion in the week to the 18th of January. Obviously we lost a bigger outflow number 4 weeks ago because the 4-week flow in black here is actually higher, still below the recent peak late November, which is here. Okay, quick run through of some of the major charts. This is the spider holding above its, well, the closest reference level I can find is 226.16, which is the 2-month point of control. Currently spider holding above that level. No change in the Russell 2000 ETF. Reference its 2-month point of control at 136.7. We're still printing below that level. Had a little attempt early in the week, actually late last week here, but this point, this level, best reference level we have at the moment, and Russell 2000 generally consolidating below that point. So we're a bit mixed. Spider definitely in a better, stronger position than the Russell 2000. I'd say this is a key chart for the upside. If the Russell can print some time back up here and that 2-month doesn't migrate, that would put the market on a much more solid footing, I think. So this kind of concerns me a little bit. Q's doing well, our new high today here, as is XLK, the tech sector. Closest reference is 2 months, 48.96, this point here, and we're strong on this chart in technology at the moment, relatively the leader. Compare that to the financial sector, XLF. After a terrifically strong run here, is lagging a little here. We looked at this chart last week. This is TLT, the T-bond ETF. The big event recently was the fact that the major point of control support at 117.15, which supported the chart here rather nicely, migrated higher just over a week ago up to 121.60. Subsequent to that, unfortunately, the last couple of days it's faded and is now printing in a weak price location below that major point of control. TLT printing back above 121.60 would be much stronger price location. Right now this looks like a weak chart. Okay, this is GLD, the gold ETF. No migration of the point of control. The major still at 119.84 at this level here, which is somewhat higher. The next level we want to put in would be the halfway point off this important November low over here, and you can see that GLD has retraced back up to its halfway point after falling below it here. This can be, should this turn over at this point, this could become a really weak looking chart. Ideally, if you're a gold bug, what you want to see is GLD printing above that level just below 116, printing some time up here. That would put the chart in a much stronger price location. But a retracement back up to a halfway and then a rejection often leads to another leg down, so I think it's kind of make or break here for GLD. And if we look at cash gold, you can see the same thing. Looking here at USO, the oil fund ETF, the major, thought the major might have migrated a little higher, but again that hasn't happened yet. But this consolidation above that major point of control is not a weak pattern. This is strong price location. Be interested to see with a bit more time in this region if that major did migrate higher. But currently, unless the chart prints back below 1078, I'd say it was in a strong price location. Dollar index is currently printing down from its recent high. We had a target between 103 104 in the longer term. As I've said last couple of weeks, I'm sort of considering the possibility this may be a top here for this chart. Even if it is, there's still be a little room to rally back a little. If there's more time spent in this area, that would put that in doubt, but it's a distribution target. What tends to happen, if this was going to be a top of some degree, as we'd see dollar index move pretty quickly lower from here. As I said last week, we can get clues from this chart on the next. This is the pound, showing it here from the Brexit top there. 10-month comes in at 124.19, and we've seen resistance now twice, almost exact on the chart. As long as the point of control stays at this point, if we see the pound printing some time back above that level, that may be a clue that the dollar may struggle. Currently though, this is weak price location below that point of control, so strength here just remains a possibility. So weak chart here, very little to key from in terms of levels here on the Euro FX chart. Technical oscillators are getting a little overbought. At this point, the major distribution I've been following, as you know, has a target down here somewhere. And finally here on the Aussie dollar, big band of resistance a little higher from the 4-year and the major. It's had a good run in the last couple of weeks, but until it prints above this band here, it's difficult to apply any weakness for the US dollar from this chart. So that concludes. I believe we're less than an hour away from the inauguration ceremony. Things could get interesting later today. But that concludes. Let me wish you a good weekend and thank you for watching.